Hey, Bulls and Bears. Home buyers are regretting their decision to purchase a home. And these are home buyers that bought in the last 2 years especially. Let's take a look. Recent article out of CNBC, over 70% of recent home buyers regret their decision to purchase a home. No surprise to any of us probably, right? The number one regret, guess, they spent too much money. There was this mania. People thought they had to go out and buy a home. Home prices were going to go up forever. They were bidding over the asking price. It was a real estate housing bubble, FOMO, that's fear of missing out, mania, that you're never going to be able to buy a home unless you buy now. And now these people, most of these people, over 70%, are regretting their purchase. And here's where it gets even crazier. 36% of homes purchased that were over asking price, the buyer purchased it without seeing the home. That's how much of a mania that there was. People would do anything. People would have done anything to get into a house. Things have changed now. But desperate measures, including not inspecting the home, waiving all requirements from the seller, and going far over the asking price. In fact, of all home offers that were accepted over the asking price, the median amount that people paid over the listing price was $65,000. $65,000 over the listing price. And that was the median, some even higher. People were desperate to buy homes. There was fierce competition. And now so much has changed. Empty open houses, sellers reducing their prices. What a drastic market change in just 6 months. And also, over the past 2 years, over 80% of home buyers that were surveyed said they had to put in multiple offers to finally get one accepted. Now, were these fears that many of these buyers had, were these fears legitimate? Could home prices have continued to go up? Well, think about what would have happened if the Fed would not have raised interest rates and if mortgage rates wouldn't have went up. People see what happened in other countries where hyperinflation set in. Countries like Zimbabwe, Venezuela, Lebanon. A lot of countries entering either massive inflation or hyperinflation, and it led people to believe that home prices could only go up. No one expected rates to rise so rapidly as they did, and therefore no one expected the housing market to cool off as quickly as it did. I shouldn't say anybody, because of course we did here, but many of these home buyers did not expect that. Now, viewers of this channel sometimes say I don't have much good news. This is actually good news. The fact that the housing market is correcting is good news. The fact that the mortgage rates are rising and were allowed to rise by the Fed, and the fact that the Fed is raising interest rates is good news. Now, I wish they would have done this a lot sooner, but now we are seeing a correction. Imagine if the Fed wouldn't have raised rates. Imagine if mortgage rates were still around 3%. Would this bubble still be getting bigger? Yes, I think so. So as many people out there that are critical of the Fed, I'm no fan of the Fed, but they're actually doing the right thing by allowing mortgage rates to rise. I wish they would rise a lot faster, and I wish mortgage rates were 10, 15%. I wish the Fed funds rate was 10, 15% like it was back in the 80s. Home prices would absolutely crash. Now, some people say that's terrible. If home prices crash, if mortgage rates go up, no one will be able to buy a home. Well, that's not true. Mortgage rates will be higher, but home prices will be lower. You see, it balances out. And that's why we're seeing home prices correct now, because it balances out. And would you rather have a $1 million home with a 3% mortgage? Or would you rather have a $200,000 home with maybe a 10% mortgage, and let's say the payment is the same because the interest rate and the prices offset each other? You could pay off that lower principal loan much sooner by making extra payments, by paying more than the minimum monthly payment. If you're stuck in $1 million home that's really only worth $200,000, the only reason it's worth $1 million is because of the low mortgage rates. You're going to be paying a lot more for that home in the end, and it's going to be more difficult to make larger payments or to pay off that principal. Do you see what I'm saying? So higher mortgage rates and a lower home price is better, in my opinion. Please let me know what you think down in comments. Now let's take a look at what's happening with inventory. And this is inventory of new homes. And let's compare this to the spike in inventory that we saw before the 2008 housing bubble finally went bust. And we see to the far right here, the inventory of new homes is approaching the peaks and the highs of what we saw in the housing market prior to the 2008 housing bust. Very interesting, and in such a short amount of time. Take a look in the previous housing bubble. Inventory started to rise in 2005 and didn't peak until late 2008. This most recent spike in inventory of new homes started going up in late 2020, and we're already near the peak of what we saw in 2008 in just over 2 years. Pretty amazing turnaround. We have to talk about this. Here is going to be the trick. We want to be able to take advantage of the buying opportunities that are ahead once this really flips to a buyer's market. And it's going to be very difficult for people to stay out of debt and to be in a position to buy a home when prices do fall in the really affordable category. With the rising cost of living, the massive job losses we're going to see, very few people out there are going to be in a position to buy a home. They're not going to be qualified. Their finances are going to be a wreck. Their credit score is going to be tanked. And with the cost of living, very few people will have cash to buy a home. So I think it's going to be a lot of big money investors that are going to be scooping up more homes. In fact, in the previous quarter, we saw an increase in the number of investors buying homes and cash deals. So this is going to be a very interesting dynamic as this housing bubble continues to deflate. And let's hope that it does continue to deflate, that a force doesn't come in or people don't decide. And let's hope that the money guys don't come in and decide to drop rates, because things are already being implemented to try to keep this bubble inflated. So it's kind of inflation versus deflationary forces. For example, here's what's happening over in DC. DC to provide up to $200,000 for first-time home buyers to purchase a home. So instead of incentivizing people to wait and maybe wait for a better time to buy a home, wait for the market to correct more so home prices are coming down, or instead of encouraging people to wait for home prices to come down, they are trying to get people into a home at these current bubble levels. Home prices haven't come down much at all. They've barely budged. And now we've got these incentive programs trying to get people into an overpriced home. How many more of these programs are going to come out to get people into the housing market right now? Probably not a good time to get in. So what do you think? Are they trying to sucker more people into the housing market at the peak? And will we see more programs like this rolled out? Please let me know what you think down in the comments. To me, it looks like a rope-a-dope type of thing, right? So let me know. Thanks everybody for watching this report. Be well, big love, keep stacking. Bye for now. Peace.